So you want me to go ahead, Rebecca?
Not yet, Dr. Hussain.
Okay.
Give me a second.
Sorry.
Yes. Good evening, everyone, and welcome to the TEDU Forum. I am Dr. Rebecca Gookool-Bosland, an economist at the UWI, and I will be your chair for this evening's conversation in collaboration with Mr. Bradley Osborne, an economist in training. This evening's session will be focused on the national concerns associated with the upcoming budget, which will be read on the 4th of October, 2021. This conversation is being hosted by the Trade and Economic Development Unit, TEDU for short, which is a research cluster at the Department of Economics, the UWI St. Augustine. For some time, the TEDU has been using its national conversation platform as a forum to facilitate engagement between experts on the economy of Trinidad and Tobago. The objective of these conversations is to ensure that the public is informed of critical information on and analysis of the economy in a timely manner. This evening's panel of experts include Dr. Roger Hossain, Mr. Kevin Ramnarine, Dr. Anthony Gonzalez, and Dr. Bo Tawari. Before handing over to the panel, I would like to remind everyone to ensure that your microphones are muted during the presentations. At the end of all presentations, you will have an opportunity to unmute and engage our panel directly. You may also use the chat feature in Zoom to post your questions and comments during the presentation. Note that the session is being live streamed via YouTube as well. So without any further delay, I'd like to ask Dr. Hussain to kick off this evening's presentations. Dr. Hussain, go right ahead.
Okay, Rebecca, thank you very much. Good evening, everyone. So, Rebecca, just verifying that you all are seeing my screen.
I am, so you can go ahead and put it into presentation view.
Okay. So this is the pre-budget discussion. Thankful for all the participants that helped the board bring this session together. So I will get straight into it. What are the problems this particular budget and the medium term in Trinidad and Tobago should address? Now, there are different experts on the team. So I chose deliberately chose to focus on the stock of reserves and the macroeconomics with some comments on labor. I assume that Professor Gonzalez would speak on trade, Dr. Tiwari on planning, and Kevin on energy. So I'm hoping there's minimal overlap by going this route. Now, so what's the state of this economy? So if I were the Minister of Finance, I would sit back quietly in a corner and I would watch this economy, perhaps as if I am from space. And I would try to watch the economy and see, well, what are the problems in the economy? So if one were to take a careful look at the economy, you would see, well, the unemployment rate is starting to rise. You will see the debt to GDP ratio is rising. You will see that economic growth is stagnant. You will see that the structure of the economy is one that is drifting towards the non-tradable sector. You would see that the non-tradable exports is declining using data that is available. You would see that we have a wave of immigrants in the country from Venezuela, which just seems to be expanding. So I will take, you will see that the labor force participation rate is falling. So a practical approach to me to dealing with the Trinidad and Tobago economy in the budget, which is a key starting point towards a greater change, is to look at the facts on the floor and then gradually and slowly and one by one design policies to address them. So this brings me to this diagram here, and the entire graduate Caribbean Economic Development class of UE is supposed to be on this seminar. I made it compulsory for them to be on. And this is a diagram that they will have to know. The economy, as it stands, is at around point A. And we are opening up the economy at the end of this month. We will completely open, I believe, according to the comments of the Prime Minister, with some aspects of the entertainment sector still closed and earmarked to be open at the end of the month. And schools, in some regard, planned to be open at the end of the month. And you could move along a new production possibility frontier, because if you have a high level of underemployment and a high level of unemployment, you would obviously be operating within your production possibility capabilities. And so with the opening up of the economy and the bringing into deployment more factors of production, you will move from a point such as A to a point such as B or C or D or E along a new production possibility frontier such as PPF1. Now, the question we have to ask ourselves is, where do we want this economy to end up? Do we want this economy to end up at B, at C, or at some other point along the curve labeled PPF1, Production Possibility Frontier 1? Now, in a classroom, I would ask the students to say where, and I would ask them to say why. Here I'm going to say that a careful read of the way we are opening up seems to me to be putting us as a point such as B. And I don't think that we should be going to a point such as B, and I would elaborate on that as I speak. And some may even say, if we follow the economic recovery document, certainly I think so, we would move to a point to the left of B along the production possibility frontier, and that's even worse than at the point B. My opinion is that this economy should open up to a point such as C, where you produce more tradable goods, which is the good on the horizontal axis, and less non-tradable good, which is the good on the vertical axis. And in so doing, you therefore expand your stock of foreign exchange, or at worst, you maintain your stock of foreign exchange. And so I am of the view that the new way forward, or that the trajectory of the Trinidad and Tobago economy must be one that either generates, that creates growth, of course, but growth that generates foreign exchange, or growth that maintains the current level of foreign exchange. We certainly don't want growth that compromises further our rapidly depleted stock of foreign exchange. That doesn't do any good to anyone, and we therefore need to keep that in mind. Now, using IMF numbers between 2019 and 2026, the Trinidad and Tobago economy is ranked to be amongst the top 25 expected worst performing economies in the world. That is not good. That is not good in particular because between 2009 and 2018, we also found ourselves in the top 25 worst performing economies in the world. So that's not a top 25 list you want to make. In fact, you want to get out of that top 25 list. Now, another thing is that we seem to love favoring transfers and subsidies. And the blue line shows transfers and subsidies as a percent of capital expenditures. And what you observe is that blue line from 2011 straight up to about 2017 increased. And then, although it decreased, it didn't increase sharply. So it moved from about 765 to about 735. And that's ridiculously out of sync with the value it was in the period 2011 to 2015. And what you would notice is that as transfers and subsidies as a percent of capital expenditures circulate in the economy, you have a fall in non-energy imports. And that's not good. So you have non-energy, if you have a rise in transfers and subsidies as a percent of capital expenditure, that is not good. That doesn't do the economy any good at all. Now, in terms of where revenues come from, non-energy GDP and energy GDP has been declining in Trinidad and Tobago. And therefore, we need to take a careful look as to how to improve on our non-energy GDP and our energy GDP levels. And my view is that a lot of effort should be put on raising non-energy GDP, and in particular, the export part of non-energy GDP. And that's where I hope policymakers put a lot of attention as we move forward. Now, a lot of focus, you would hear me making a lot of comments about transfers and subsidies. So what is the big deal? Well, if you look at this scatter plot here, you would see that as transfers and subsidies as a percent of total expenditure increases in the Trinidad and Tobago economy, there tends to be a fall in the level of, in the real GDP growth performance. So it is probably because transfers and subsidies, it's leading to a type of inefficiency, a type of lax work mentality, a type of laziness. It is distracting people to come out of the labor force, leading to a backward bending labor supply curve. A number of factors. And either way, it's leading to a decline in real GDP growth. And so this is another important reason why the government needs to change its focus and its generosity towards transfers and subsidies in Trinidad and Tobago economy. And you know, when I look at the Trinidad and Tobago economy, and I always show this graph to audiences such as this, when you sum transfers and subsidies from 2000 to 2020 and energy revenues from 2000 to 2020, you see a catastrophic result. And the catastrophic result is that whilst we received about $331.5 billion in energy revenues, we spent about $391.5 billion in transfers and subsidies. And that cannot be good. That cannot be good. If all of the energy revenues that we collected, all was expended on transfers and subsidies and more, then that's really poor management of the economy, because it means that the money in the HSF and the money we use for other things are implicitly borrowed money. And that's apart from the non-energy revenue, of course. And that's something we shouldn't do. The energy revenue should be saved, in my opinion. And I am of the view that we should save all our energy revenues. We should open up the revenue authority. We should find ways to boost revenues otherwise. We should cut back on wasteful expenditure, and we should balance our non-energy fiscal balance and save all the energy revenues. That is my view. I know it wouldn't be possible to do it immediately, but that's where we should be heading over time. Non-energy exports has been declining, and that's not a good sign, because if your main sectors are not as strong as they should be because of declining oil and gas prices, then you would want your other sectors, such as the non-energy exports, to be making revenues, and it's not doing that clearly. Now, this year shows, this year shows output per worker in the Trinidad and Tobago economy. And as we can see, output per worker in the Trinidad and Tobago economy has been declining over time. And again, that's not good. That's not something that we should encourage.
Dr. Hussain, can you put it back on presentation view, please?
Yeah, I'm not seeing my headings when I do that. Hold on a minute. Okay, are you seeing it now, Rebecca, in presentation mode?
Yes.
Right. Output per worker in the economy has been declining. And again, that's something that policymakers have to take into consideration. So if I am a decision maker in this country, I would look at why output per worker is falling and try to reverse it. Now, this year again shows the relationship between transfers and subsidies and the labor force participation rate. And again, you see as transfers and subsidies increase, the labor force participation rate is declining, saying to the public that, listen, something is wrong here. This great focus on transfers and subsidies. Yes, I know you all love it. Yes, I know you all want it, but something is definitely wrong. It is not working out. We need to fix the formula. We need to fix the formula on which we run the economy. And another attribute of the data is, why is it that the labor force, the actual physical size of the labor force, is on the decline? So you could see there, from 2014 to 2020, we lost about 40,000 people. The labor force declined. And that is something that should startle everyone. If you have a decline in labor force, then it means your capacity, other things constant, and I emphasize that, to produce goods and services is on the decline because you have less warm bodies. Now, where is it that the employment growth between 2009 and 2020 contracted in the Trinidad and Tobago economy? Well, it contracted in petroleum. Now, that should worry everyone because that's the highest output per worker sector in the economy. It contracted in manufacturing. That's the second highest section in terms of output per worker in Trinidad and Tobago. It contracted in construction. It expanded in water, electricity and water, and in community and personal services. And those are areas where output per worker is low. So what you are seeing is a kind of asymptotic stagnancy in the economy setting in the Baumol-Cost disease sense, in that there is growth in employment in areas with low productivity and a fall in employment in areas with high productivity. And again, if I were a policymaker, I would step back, look at the data, analyze it in great detail, and then design policies to help halt and reverse some of these tendencies. Now look at this graph here. This graph here is showing the non-government employment and government and public service statutory board employment. Now, Rebecca, what you would want in a capitalist economy is to see government employment falling, so you become less involved in the labor market and you allow the private sector to operate more. But we are seeing exactly the opposite result in Trinidad and Tobago. And again, in my humble view, this should bother all policymakers, and measures should be put in place to reverse this trend. Hello, Rebecca, are you all hearing me?
Yes, I am. Yeah.
Yes, Dr. Hussain, we are hearing.
I am not sure why the graph isn't moving. Hold on, Rebecca, I am getting too much problems.
No problem, Dr. Hussain, go ahead.
Here we see the trend in the unemployment rate for workers with a university education. I mean, and this should startle everyone. And I want to make it clear to all involved that this is data from the CSO, and my comments here don't represent the views of anyone beside myself. People with a university degree using CSSP data has been on the rise in Trinidad and Tobago. So it's something we need to look at carefully and see why it is our bright young people leaving the university and not finding jobs. Now, again, concern about the labor market. So we saw earlier, Rebecca, that employment in the government sector is rising and employment in the non-government sector is falling. So what I did here is I show you output per worker in public administration, which represents government, and output per worker in the non-government sector that represents some more or less the private sector. Output per worker in the non-government sector is significantly higher than output per worker in the public sector. So good practice logic will tell you that you should have more workers going into the non-government sector and less into the public sector for your output to expand. We have the opposite going on in Trinidad and Tobago. And here we also see a remarkably worrying point. If you look at the data from 2011 to 2019, and I hope I get the color, right? What's that? Some kind of salmon or red color there. You would see that not in the labor force or the economically inactive part of the population increased by about 60,000 people between 2011 and 2019. And I asked the question, Rebecca, why are people choosing not to be part of the labor force? Why are people dropping out of the labor force and remaining economically inactive? And here it is, we see what I consider to be a crunching blow to the productivity of options for this country and production options. Both natural gas production and barrel of oil equivalent with crude oil is declining. And I'm sure Kevin Ramnarayan will speak about these kind of things. And the labor force participation rate is on the decline. So it's two of our main factors of production in Trinidad and Tobago is on the decline. So no wonder the economy is not growing. And here we see the relationship between natural gas production and real GDP growth, real GDP. So if it is, and as Kevin Ramnarayan will tell you all again, real GDP in 2021 is expected to be less than 2020. It means that economic growth in 2021 will be dormant, if at all positive. So how do we move forward? Again, I appeal to policymakers to push the non-energy export sector. Push the non-energy export sector because the energy export sector has the benefit of the huge giant multinational companies. So we should push the non-energy export sector via the e-tech parks, fixing these are doing business, using these specialized economic zones, trading more south-south, looking to the Venezuelan partners, to the Caribbean partners and so on. Register all the Venezuelan labor so we would know what are their skills. We would know who are the people here in our country, what contribution they can make, and we may even have to consider sectoral labor market work permits. Fix the doing business environment, and I caution all that the ease of doing business report from the World Bank, I think it was stopped yesterday, but even so, continue to fix the indicators that point to how to do business in Trinidad and Tobago. Restructure our fiscal expenditure so that we have a lower level of wastage in the economy and a greater amount of non-energy export revenues. And of course, look south. Look south because US dollars are US dollars, regardless if they come from Colombia, Ecuador, Peru, Chile, Panama. Some may say Panama is not south, but I use it in terms of the developing country sense. So we need to find ways to boost our economy. So these are just some preliminary thoughts that I offer in terms of what are some of the areas the budget should focus on, given that it would be read in a short space of time. So with that, I thank you, and I turn over to you and Bradley Osborne.
Good night, Doctor. Good night, Dr. Hussain.
Good night, David.
David, yeah, okay, good. So you recognize the voice. I have to, I like
no, we will take the questions after David.
Oh, okay.
Yes.
Yeah. All right. Thank you, everyone. So for those who just joined, we just heard from Dr. Hussain on, this is the National Conversations pre-budget discussion. For those who recently joined, thank you for tuning in. And that was a great presentation, if I might say, from Dr. Hussain, my teacher. I myself took some notes for the relevance in class here. And next we will have Mr. Kevin Ramnarayan, who should be talking on the energy sector in particular. He should have his presentation. So let's just welcome Mr. Ramnarayan.
Hi, good night, everybody. I don't have a presentation, but I will speak to the points that I would like to make. As you know, the budget is on the 4th of October, and we normally expect in the budget to get an idea of the energy sector's health or lack thereof. So just to give you an idea of where we are, as Roger would have pointed out in many of his presentations that he's done in the past, whether Trinidad and Tobago's economy grows or not is highly correlated to natural gas production. So I start off with natural gas production, just to give some context on where we are with that. In 2010, Trinidad and Tobago's natural gas production was its highest ever, 4.3 billion cubic feet of gas per day. By the time 2015 came around, it had fallen to 3.8 billion cubic feet of gas per day. And it is now around 2.7 billion cubic feet of natural gas per day. So we've had a constant decline in gas production over the last 11 years. There was some brief respite provided by Juniper and Angeline around 2018 and 2019, but the decline has now been very sharp in the last 2 years in particular. So the story with regard to natural gas for the last 11 years has been generally downward. See, the same thing applies to oil production. We are currently averaging around 58,000 barrels of oil per day. And in 2015, that was 78,000 barrels of oil per day. So both oil and gas over the last 11 years or so have been in decline. With regard to the outlook for production for 2022, it is actually positive. The BHP Billiton Ruby project has come into production, and that will bring some increase in the production of oil in 2022. So I expect that the oil production in 2022 would go from where it is averaging right now, around 58,000 barrels of oil per day. It may go up to somewhere in the region of 70 to 72,000 barrels of oil per day. And that's a pretty healthy increase in production. And we also expect gas production to increase in 2022 from the average of around 2.8 billion per day in 2021 to averaging around 3.3. The question is that gas production figure, while it's welcome and it's needed, is it sufficient to support the industrial base of Trinidad and Tobago? And the answer quite simply is no. If we were to satisfy all the demand in our country for natural gas, we would have to produce somewhere in the region of 4.4 billion cubic feet of gas per day. And it's highly unlikely that we will ever get back there. So both oil and gas production will be on the increase in 2022. The question is, how long can that increase be sustained? And in my view with regard to gas, while we will get some improvement in production in 2022, and some of that will spill into 2023, by and large, the outlook for gas production in Trinidad and Tobago remains, I would say, sort of pessimistic. And the reason for that is when you look at what I call the two great hopes for Trinidad and Tobago's natural gas production, and by extension, Trinidad and Tobago's economy, the two great hopes that we've had out there now would be deep water gas, and the other one would be cross-border gas from Venezuela. Both are low probability at this point in time. The Woodside acquisition or the merger with BHP Billiton's petroleum arm, I think, has put another layer of uncertainty onto deep water gas. On top of, and that stands on top of the uncertainty around the commerciality of the gas. I know that there's a map floating around with Trinidad and Tobago divided in two, and somebody has quantified in the trillions the value of the gas and on what they deem the Tobago side. But the probability of deep water gas flowing into our economy when it was expected in 2026 is less likely now because of that Woodside BHP acquisition. The other thing is the likelihood too of cross-border gas entering Trinidad from Venezuela is also a lower probability because of the US sanctions on Venezuela. And because the company that was the main driver of that narrative, Shell, has largely lost interest in Venezuela. And as we speak, Shell has 10 employees in Venezuela in their Caracas office. So those two great hopes for our natural gas production, by and large, the probability of those great hopes, becoming commercial and so on is less. So I would say generally, while there would be this bump in 2022 and 2023, it is more than likely difficult to be sustained. With regard to the price environment, I think the price environment is very good for Trinidad and Tobago, but I don't expect that to translate into any sort of great amount of revenue because the production is so low. So we probably saw that natural gas prices have crossed $5 per MMBTU in the United States. That's the highest it has been in a very long time. And oil, of course, is somewhere in the early 70s around there. And those are good prices. Methanol and ammonia prices are also very good. They're both, ammonia prices are somewhere between 500 and 600 US dollars per ton, which is great. Methanol prices are somewhere around 400 US dollars a ton, which is good. But again, we don't have the quantum of natural gas to really get the benefit from those high prices. So if you were to look at all four variables, gas production in 2022 is up, oil production in 2022 is up, prices are good, oil prices are pretty good. I expect them to stay in that general region, and gas prices. So 2022 should be a year where we would realize economic growth if we measure economic growth as year on year. But the years that preceded 2022, and I would say 2021 and 2020 were probably two of the worst years. 2020, we expect that the contraction would be somewhere in the region of 8, probably north of 8%. The worst contraction since 1983, Roger. Is that the worst since 83? Yeah, his mic is off.
Yes, Kevin, 1983 was the worst contraction.
So I just touched on the four variables: oil production, gas production, oil price, and gas price. The fall in natural gas production, of course, has had consequences which are pretty obvious and which are pretty well publicized. There have been some casualties. Plants at Point Lisas have been shut down. I think some plants have resumed production in Point Lisas. Some plants were shut down in 2021 and 2020, but a number of plants remain down. The MHTL M1 plant remains down. The Methanex Titan methanol plant remains down. The Yara ammonia plant remains down. Of course, Mittal's iron and steel plant was shut down since 2016. The refinery, of course, is now down going on 3 years. And the Atlantic Train 1 is very unlikely to restart. And the reason for that, again, is the lack of natural gas to restart the train. So we have this ongoing problem now with the contraction of the energy sector as a result of lower natural gas production. And so the question is really, what do we do? We must also be cognizant of the fact that our two major players in the energy sector are two European companies, BP being British and Shell being, Anglo-Dutch. And both companies have changed course. They have changed the way they see the world. And they are, of course, heavily influenced by policies coming out of the European Union in particular with regard to climate change. So BP's capital expenditure profile is changing and shifting towards renewable energy and green type investments in energy. And Shell is following the same direction. So the probability of them being excited about investing in Trinidad and Tobago going forward becomes more and more difficult prospect. So as we speak, BP is not drilling in Trinidad. Now that is something which is unheard of, because at any given point in time, BP is drilling in Trinidad, whether it's 1 rig or 2 rigs or 3 rigs. When I left office in 2015, there were 4 rigs working for BP in 2015. So today, with the Matapal project finished about 2 months ago, BP is currently not drilling in Trinidad. And there is no expectation of when they are expected to drill in Trinidad again. So, and I think that has to do partially with the unattractiveness of our fiscal regime, and partially to do with the whole change in how they view their future, and they're viewing their future as being less hydrocarbons and more renewable energy. So that in a nutshell is where, I mean, if I was to give my view on Train 1, I don't see Train 1 restarting. And the simple reason for that is that the gas is not there to restart Train 1. These plants have a minimum volume of gas that they need to operate, below which they become unstable. And for Train 1, that minimum volume is 246 million cubic feet of gas per day. The supplier of Train 1 has said, which is BP, that they don't have that gas, and they certainly don't have that gas to commit for a 5-year contract. So the likelihood of Train 1 restarting in the near to medium term, therefore, is not on the cards. So while I see 2022 and 2023 to be years of some recovery, it is to me difficult to say that it could be sustained beyond 2023. And therefore, getting the energy sector back to where it was in its in what I would consider its heyday, probably its peak was between 2013 and 2014, is going to be very difficult. Our revenue from the energy sector is now somewhere between 7 billion per year to about 13 or 14 billion, in that range, for the last couple of years. In 2014, the energy sector generated $31 billion in revenue for Trinidad and Tobago. So although there is recovery, it's recovery not comparable to the peak revenue of 2014 or the peak contribution to GDP, which may have been somewhere around 2012 or 2013. So I mean, that's where we are. And I think the real question now is how do we grow the economy outside of the energy sector? Because most of the times, as Roger's models and so on would show, most of the times, I would say 9 out of 10 of the times when there's growth in Trinidad and Tobago, there is growth in natural gas production. So we have to figure out how to grow this economy without growing natural gas production. Growing natural gas production would be welcome, but it should not be the only driver of growth. And I think that is really the question that we have to answer for this country going forward. Thank you very much.
Thank you for that presentation, Mr. Ramnarayan. So what we just got from him would have been a breakdown of the energy sector in Trinidad. I personally concur with a lot of the views expressed there. What we see is that a lot of the dials on the economic machine are reading red, and we see a lot of flaws in the economy being exposed because of the reduction in energy revenues and the general winding down of the energy sector. So it's exposing a lot of flaws and the reliance on government expenditure. So transitioning now to Dr. Anthony Gonzalez, who is coming to talk on trade. So we will hear that aspect of the economy and Trinidad's economic prospects.
Yes, thank you very much, Mr. Chairman. Let me thank TADU for inviting me once again. And let me see how pleased I am to be with all of you here this evening. I started on the last occasion when we discussed the midterm review. I started to discuss the question of debt sustainability. And I want, in a sense, to continue there and then go on to look a bit at the recovery aspect that is very important. And there I hope to touch on this question of trade and investment. Let me say that in my mind, there are four basic objectives that this budget must face. The first is how to assist us in tackling this virus. The next one must be how to protect the vulnerable people in the country in this context. And the third one would be this question of recovery. How do we stimulate the economy and get out of this, this situation, bearing in mind all that was just said by the two previous speakers, which it is not just going back to normal. I think they are both emphasizing the need for diversification, getting out of oil, doing something different. So we're talking about transformation. And then the fourth objective, which I believe to be crucial, which I want to start with, is the issue of sustainability of debt. Now, in my last presentation in June, I pointed to the fact that this country has had deficits, fiscal deficits since 2009. We had a fiscal deficit of about $188 million at the time. And now this deficit has ballooned to around an estimated $14.5 billion for the 2021 budget and the revised budget. Before that, it was 16 billion. 16.5 billion for 2020. And these deficits have given us a debt profile of around a debt to GDP ratio of 86%, climbing from about 33% in 2010. And we have a fiscal balance or a fiscal deficit to GDP of around 11%, which, as all of you in the particular field, fiscal policy, budget management, and so forth, would know that that is considerably high. Anytime you go over 5%, you're considered to be treading on dangerous ground. So we have a situation where we are facing fiscal deficits, and coming next year, in this upcoming budget, I expect that we're not going to see anything below 14 billion. So to me, the issue here now is how do we finance that deficit? Could we continue to borrow as we have been going all along, and have the debt to GDP ratio, have our debt servicing rising to abnormal levels? I think at present right now, or at least up to the latest figures I saw, was up to last year, where you had roughly 32% of your government revenue going towards servicing debt. And that figure would have climbed a bit since then, okay, because we, as I said, we had an estimated deficit of roughly 14 billion for this last budget. So in fact, we are more or less in a crisis situation in terms of debt sustainability. How can we continue to service this debt? So I want to look at to what extent we can find alternative ways to finance this budget. And in the past, we have tended to look at the Heritage and Stabilization Fund, and to some extent borrow on the capital market and on the external market. I noticed, for example, that for the last budget, I think when I say, well, previous budget, 2020, the government raised about $1 billion from the commercial market, the local commercial market. They then had emergency drawdowns from the Heritage and Stabilization Fund of about $900 million US, which is about 5.73 billion, which is about TT dollars. Then they sourced 300 million from the World Bank and from the IDB and I think the Andean Development Bank. And then they borrowed 250 million US from the external capital market. So that gave us a certain amount of exposure in terms of external borrowing, and we began to see the external part of our borrowing rising to a point where it becomes highly dangerous, in the sense that you have to earn foreign exchange to pay foreign debt, and if you're not doing that properly, then you're going to have trouble down the road. So the question here now is, how can we find alternative sources of funding this deficit, which I agree we have to run with a certain deficit because of the current COVID situation. The question of is its size and exactly how we deal with it. So I tend to feel that there are sources of funding here which have not been properly explored. And when we look at the report of the Roadmap to Recovery, that is the Roadmap to Recovery Committee, they did in fact look at some of these alternative sources. And I want to probably just delve into a couple of them here to give some indication as to what may be possible. First of all, they spoke about public-private partnerships. And they pointed to a number of projects. I think the CDB did some work here. And they pointed to a number of projects, things like the airport project in Tobago, the wind and solar power production projects, the integrated solid waste system, the waste energy project, the Port of Spain General Hospital, and so forth, low-cost housing, and so forth. And where they pointed that government, it was possible for the government to mobilize anything like 50% of the funding of these projects. I think those projects would have cost probably overall about $750 million US dollars. I'm not sure I have the correct sum here, but it would be roughly something in that vicinity, and government could probably raise about 50% from private funding. Now, what I would like to see in this coming budget is some indication as to what extent that has worked, to what extent have we been able to get private funding into some of these projects in order to stop us from having to borrow from the local market as well as the foreign market. You also have this question of assets, both strategic assets and non-strategic assets, which could be sold and from which you could raise a fair amount of capital. We all know the long list of state enterprises that exist and some of the non-profit making ones, and we wonder what are these things still doing on government books. We also know that a lot of them do not need much preparation to be sold. Their financials are okay. Things like government investments in banks like the FCB and the public bank and so forth. But in that same report of the economic recovery team, you see where they list a whole number of potential assets which could be sold as going concerns. They talked about the Tobago Airport and the Piaco Airport could probably be bundled with that. They talked about Flip Deco. They talked about the port. Well, we know the port is under consideration now and so on. They talked about the hotels, the Hyatt Hotel, the Hilton Hotel, the Magdalena Hotel. We're not sure what government is earning from these hotels here in terms of profitability and so forth. And there are several others. I don't have the time to really go into them. You know, there are things like we know the refinery, petroleum refineries up for sale and so forth. And there are certain other things like electricity distribution and so forth. So there's scope here, in my view, for raising capital, and some of these things do not require any long preparation in terms of getting their financial rights to be put on the open market for sale. And we need to, in a sense, look at them to see how we could probably raise funding in order to stop this splurge of borrowing, which is only getting us into more and more financial difficulty. We have also this question of risk-sharing arrangements where government comes in and take risks with the private sector in order to raise funding for small and medium-sized enterprises. You would see probably if you were following the discussion between the Chamber of Commerce and the government, where the Chamber has made a proposal about the government backing with tax credits and taking some risks, backing sort of these small enterprises, borrowing from the commercial banks at pretty low and or zero rates of interest. Now, there's the assumption here that the government, that these banks have a certain amount of liquidity. As you know, the government did push the central bank to lower the repo rate, and it dropped to about 3.5%. The government also lowered the statutory requirements for reserves held by the commercial bank, with commercial banks in the central bank. So you have a fair amount of liquidity flowing into the commercial banks, but that liquidity is not being absorbed because a lot of small enterprises are facing uncertainty. They're reluctant in a sense to borrow. They need some more incentive. And the idea seems here to be to try to get them to borrow at sort of at more attractive rates, and taking less risk. And then the government could probably come in and do something to that extent. But so it's help, in a sense, make funds available and allow the government to also not necessarily put out any amount in terms of expenditure. We have also this question, and I think here is where the government is hoping to have some kind of impact. And it's the question of revenue collection. The government is going ahead fully with the idea of the revenue authority in the hope that they could collect more money. I think from what I've read, I've seen where it is said that there's a gap of roughly 4 billion TT dollars in VAT funding, in VAT taxes. That is, the government is not collecting almost $4 billion in VAT. There's also the notion that $11 billion is not being collected in income tax generally. Those are the figures I'm seeing. People, I think it maybe even be more, probably even be more than anything like 16 billion. I don't want to quibble on the question of the exact figure, but there is a fair amount of revenue outside there that is still to be collected. And the issue is, what can the government really collect over the next fiscal year, which would allow us to stop this kind of splurge in borrowing. Here is something that, I was trying to work out exactly if the government gets 50% of what it thinks it could get, plus some of the other things I just mentioned. To what extent would that mean that we would depend less on external borrowing? You see, to some extent, I'm trying to suggest that could we minimize the borrowing from the HSF? And could we minimize foreign borrowing? Those are the two key things in my view. If we could minimize those borrowing from those two sources, use the other sources, sure we can borrow from the local market, and sure we can use these other sources to try to raise funding. And to some extent, we are able, along with, of course, I'm assuming, of course, we trim expenditure to a reasonable figure to be able to meet the needs of the population. And in that way, to some extent, we're able to reduce external borrowing. So the key point I'm trying to make here, without necessarily presenting it in any kind of quantitative form, I would like to present some figures to you to try to show you basically what we could say. The key point is that I think we need to stop this drawdown on the HSF fund. I think drawing down $900 million US from the HSF fund is terrible. And that if we continue at that rate, we're going to certainly deplete that fund. And we need to draw down something, but it should be a minimal amount after we have explored these other resources. So I want to stop there on that particular point and suggest that this is an area where I think we need to probably look at with some depth and see to what extent we could minimize external borrowing and minimize extraction from the Heritage and Stabilization Fund. The next aspect I want to look at, and of course there are several aspects of this discussion that we could go into when we're talking about a budget, but the second aspect I want to look at is what I believe to be the heart of the recovery. And that our two previous speakers alluded to it when they talk about going away from oil and trying to develop some kind of diversified economy. Now, I agree fully with Roger that the emphasis has to be on the tradable sector. I think if we, going forward, we cannot go back to this non-tradable sector that we have allowed to bloom and blossom in this country at the expense of the tradable sector. We have to start looking at exportables, and we have to start looking at competitive import substitutes. And we have to find a way to put more emphasis in the budget on production of these things, on competitiveness of these things, and so on. And there are tremendous possibilities here that we have, for instance, in agriculture. I think last year, the Minister of Trade went to Parliament and she listed all the amount of things we were importing, and she pointed out all the various things that we could possibly produce here in terms of our own food production. And to me, there's tremendous scope here for competitive substitutes. And we need to encourage that. And we need to devote more attention to developing that. There was a start somewhat in the last budget when 500 million was dedicated to agriculture. But to me, that was just a step in that direction. Of course, we made agriculture more or less tax-free. So that is to some extent for people to go into agriculture. But certainly more has to be done here. And we need to think more in terms of our future food security. Now, going forward, I think we have to look at basically how we make more people come into competitive export production and how we make those who are already there stay competitive, how we encourage, how we allow, facilitate them to really remaining or maintaining their competitiveness in markets abroad. It's a tough world out there, and it's a tough world for small economies, and a lot of those small enterprises that are involved in exporting, both within the region and outside the region. So we have to look in terms of support, what they need to be able to sustain their competitiveness and also become, as if they're starting up, to become competitive in this field. So it's not just saying that we have, say, 30 or 40 enterprises that could produce and export competitively out there and focusing on them. That is important, but we also need to encourage others to come into the field. And let me say, I'm not just talking about goods. I'm also very cognizant of the need to do similar work in services. And we're very much behind in services. We're still, in a sense, playing around with a national services policy. We don't have a proper plan, not even a good export plan for services. Here and there, we see one or two missions where we try to cry people out to do some work in services. But it's not something that we are tackling in a very, very systematic way. Again, if you look at the minister's presentation to the parliament sometime last year or year before, you'll see that we are lacking seriously in services. I think even by the minister's own admission, the work has just started. So we have to try to leapfrog a lot in the services industry. But let me say we have, in a way, to focus on export promotion. How do we boost our export promotion? And we have an idea of what needs to be done, but the problem seems to be getting it done. For instance, how do we boost our economic diplomacy? How do we strengthen our presence abroad in certain markets? We have been talking about setting up a trade facilitation office in Central America. For years now, I've been hearing this now for how long years? From years, the minister spoke about it in her presentation. It's still something to be done. I think they said they were planning to try to do it in Panama to cover Central America. We want to do a similar office up in, I think, Jamaica. Right now, we have one in Cuba, which seems to be functioning reasonably okay because our exports with Cuba are not doing too badly. But we need to have a presence, a much stronger presence abroad in the markets that matter to us. And the markets that matter to us are really the markets of this region, North America, and to some extent growing South America. It seems in time that the other markets may emerge. For example, we could begin to start thinking about Africa, with the possibilities there. We have our traditional markets in Europe, which we have been losing a bit with some of the traditional commodities like sugar and rice and so forth. But yes, Africa is growing very fast. And there seems to be possibilities for us for trading among sort of like-minded kind of economies where we sort of enjoy similar taste and demand for certain things. It's possible for us to do some probably more business there. And I see there's some move to try to strengthen links in that direction. But we need to move forward and, for instance, overhaul the export TT service. It's working with limited resources, and I appreciate the efforts that are being made, but we need to modernize that outfit and really make it to be a very dynamic export promotion bureau, really providing a whole lot of services, co-financing, and a whole range of services, training, and all this sort of thing. They have been involved in certain interesting exercise in bringing people to learn about global markets and training them and so forth. But a lot more has to be done there. I don't want to spend too much time. Maybe we could focus on the discussion on some of this, and we could exploit a bit further. But certainly, I would think that in the recovery that we are talking about here is one that is going to focus on tradables, and one that will provide the incentives, work more with the producers to try to get them to boost production, bring more people into competitive production, find that way of doing that, stimulate more and more exports. And we haven't gotten the chance to talk about the industrial parks, the export processing zones, and all these things that we need to put in place that could help us boost exports and earn foreign exchange. All of these things are on the table in terms of what I'm trying to suggest. All I'm saying basically is that the focus must be on production, on exports in the next budget for us to have a recovery that will be sustainable, that will allow us to be able to earn the foreign exchange that we need to earn, and allow us to find some kind of sustainable recovery over time. Thank you very much, Mr. Chairman.
All right, thank you for that profound lesson, Dr. Gonzalez. So again, we see here the theme that there's just generally unsustainable practices being, in essence, catching up to us now. So basically, the accumulation of debt has backed us into a corner where we now have to explore these very different options from what we have been practicing in the past. So now I'm here to welcome Dr. Tiwari, who will be talking to us about general policy and its practice.
Okay, thank you very much, Chairman. Good evening to everybody, all the panelists. I enjoyed all the presentations, and also to the people who are logged on and listening. I think all of us would acknowledge that the years prior to March 2020, when COVID became a global pandemic, were years in Trinidad and Tobago that were years of severe economic decline. All the numbers show that. But having said that, I want to say that the impact of COVID on the world economy and on our economy and countries like ours is severe. And there are two things that we need to take note of. One is that it is going to be tougher to export as countries already competitive get a jump on us in terms of competitiveness because of their technological platform and the fact that they are already involved in e-business and things like that in a significant way globally. So, and the second thing I want to say is that prices are going to be higher in the world because of the logistical problem that we are seeing now in this COVID situation. We don't know how it's going to continue. And that means it is absolutely critical for us to go on an import substitution drive to the extent that we can. So I want to make the case that we've got to take into account the reality of COVID. Secondly, exports are going to be tougher. We need to continue to do it, and we need to be more competitive in it and do our best in it, do all the things that are required of it. But we also need to import substitute like we never did before, because the conditions are favorable to all doing that. And the consequences of not doing that are going to be severely harsh in terms of price, what can I say, price impact on us. So I begin like this. It would be foolhardy for the human race not to recognize that the COVID years from March 2020, when it became a worldwide pandemic, till perhaps the end of 22, when most 2022, when most economies would have opened up as human societies learned to live with COVID. And when hopefully a significant part of the human race will have been vaccinated, we wait to see all of that. It would be foolhardy of the human race not to recognize that this particular period of about 2 years are watershed years which severely disrupted economies, the world economic system, society, the social order, social behavior. It ripped away the lives of human beings from loved ones by the millions, and it pushed technology to play an enhanced role in human communications, in transactions of all kinds, the conduct of business, the practice of politics, the modes of governance, the delivery of education, and even the expressions of empathy. And all of this is happening, notwithstanding the fact, and we should not forget this, we still do not know if COVID started because of people eating bats, whether COVID started because they were experimenting with bats in a lab, or whether it started because people in a lab were experimenting with viruses. We still don't know that for sure. Now, and the debate about vaccination, whether to vaccinate or not to vaccinate, will continue to prolong this pandemic and the economic and humanitarian agony. And it will create, you might say, the opening for a kind of continuing ideological conflict, because the vaccine is in the middle of a kind of right-left debate. Now, you can't have 24 months like this and continue to think in the same way about the present and the future. You can't have 24 months like this and think about life and living in the same way, or about home, or about work, or about education, or about society, the economy, values, and priorities. So I want to say, whether we know it or not, there's a shift taking place in our own minds and in the minds of a lot of people, and that is going to manifest itself in behaviors. And I want to say that one of the trends in economics now is to look at the behavioral side of economics, how people behave, and we end up with economic action and economic results. It is estimated that $20 trillion have been pumped into the financial system because of COVID. 19 trillion of those have gone to the industrialized world. Now, would such a thing make this COVID period a watershed period in economic history and financial history or not? I won't answer. Let's reflect on it. But by comparison, in the 2009 financial crisis, the IMF injected $250 billion to restore market confidence. But for COVID, this time they have put $650 billion US in the global financial system. This is in addition to the rapid credit facility offered to poor nations, in which they double the access funds available to every nation, and in addition of $250 billion more allocated for debt and emergency relief. Now, do these things, the proportionate change in the way they approach it, do these things reflect the decisive, the defining nature of COVID in our economic and financial history? What has the COVID crisis pandemic revealed about the world's economic condition? First of all, that the need for facts and accurate data are absolutely critical, and that timely data is the essence of everything. More than that, the value of trusted data has increased in this age of misinformation. Now, I want to say in Trinidad and Tobago, in a fundamental way, that does not apply. We don't have the data. We don't have timely data. We hardly get trusted data. And it's very difficult to determine what are facts and not, given the different perspectives that take place in this country. So I will give you two examples. One is what is happening with the police commissioner. It's hard to know what are the facts in that. And the other one is NGC. It's very hard to know what are the facts in that because you're getting different perspectives you could hardly know. And then the data is so backward coming out of the official statistical entities. Thirdly, COVID and structural deficiencies has revealed, vulnerabilities and structural deficiencies in a way that we never saw them before. So if any society and economy is going to build back better, to use that United Nations phrase, we must acknowledge how the conditions and context of economic challenge are different this time. And we must take time and make effort to reformulate and redefine the problem before jumping to propose solutions. The problems as defined before may no longer be relevant because now we need to identify different questions and the way we conceptualize the problem may well change as well. So in a sense, we are kind of into a reformulation stage if we look at this COVID matter seriously. Because in our own case, we've had a situation in which we have lost per capita income significantly over the first 5 years of this administration, but that is exacerbated now by COVID. And we have also lost GDP again in the 5 years before, and that is now exacerbated by COVID. Now, instead of looking at the many problems and challenges we have, I think that in a fundamental way, we have to start to look to the future and work backwards. And the reason I say that is, if you look at what your reality now is, if you look at your revenue, your expenditure, your fiscal deficit, your debt repayment requirements, etc., I think when you look at those things themselves psychologically become constraining and debilitating. If you start with revenue, expenditure, deficit, debt, you are going nowhere because, first of all, there is too little room and too many constraints. And secondly, there is nothing to inspire and therefore little motivation to take radical action. Now, what do I mean by radical action? Radical in the way I am using it here means a far-reaching or thorough action to alter the fundamental structure of the economy and the social order. You can only do that if you are not mired in the quicksand of the present. If you can only do that if you break the shackles of precedents. You can only do that if you wave away the temptations of orthodoxy and you begin to see the future looking at you brightly and beckoning you forward to present innovative, sustainable solutions for a restructured country and to some extent a restructured world, because you want to know how you fit into that. Now, the other thing I want to say is that there is a movement by the G7 and the G20, which in my view is going to result in little movement of investment in the rest of the world outside of the G20 and the industrialized world. And that is the determination of the lowest rate at which taxes are allowable. And they are going to decide on something like 20% or something like that. And that is going to keep them all in the industrialized countries. Because together with that kind of taxation, there's also the new nationalism. And there is in addition to all the things that they are doing globally, there's a kind of insularity in economic matters, etc. And there are partnerships that are linked to the individual insularities. And I think that we need to understand what those things are going to mean to us. In Trinidad and Tobago, we have a net outflow of investment, not an inflow of any investment. Now, suppose though, we started to think that Trinidad and Tobago will be a smart island economy, modern, knowledge-based, and technologically driven, aligned to world progress and progressive countries, focused on creating good jobs and income, generating entrepreneurship, business creation, and it will consist not only of Tobago and Trinidad, but the other 5 islands, 7 islands, responsive to and swiftly adapting to climate change and its impact, committed to a renewable, sustainable economy, which attracts social entrepreneurs as well as traditional entrepreneurs and innovators, and will be custodians of ecological treasure which reside here, environmental pleasures, cultural thrill and inspiration, peaceful retreat in a human environment of racial harmony, social cohesion, religious tolerance in which dignity of all human beings is reinforced by mutual respect in attitude, disposition, behavior, and exemplary leadership. Suppose we conceive of this as a society that recognizes merit, addresses injustice, creates opportunities for all, and strives for equality and social balance. Suppose we recognize this society as one that wants to pursue a quest for sustainable development and emphasize the values of equity, inclusion, and social justice. Now, if a vision like that pulled you forward, you would know immediately that on the back of internet-based government services, some of which we have now, on the back of e-business, some of which we have now, on the back of remote working, some of which we have now, and on the back of online learning, some of which we have, that the immediate task is to build a smart economy and society with smart businesses, smart government, smart institutions, smart schools and learning institutions, and well-trained, technologically savvy people. That would make the Ministry of Digitalization, that would give them the task of getting that done. And we would put a timeline, which is 2 years, get that done in 2 years. Smart economy, smart government, smart schools, etc. Work with the ministries and build, and they would have to build effective partnerships to do that. They would have to do it with the teachers in the school system and the Ministry of Education. They'd have to do it with business to get it done. And if that were funded in fiscal 2022 and 2023, then we could see something really happening if they knew what they were doing and they collaborated to get it done. It seems to me that should be our principal task, to ready ourselves for a world of automation, of Internet of Things, robotics, artificial intelligence, and the 4th industrial revolution. If we are not preparing for that world, then I want to ask you, what world are we preparing for? Because the world we are preparing for is the world that cannot absorb those graduates out of UE. And that's why they're migrating to Canada, which have people line up all over the world to come. And what is the point of preparing for a lesser world? There's no point to it. So we have to make up our mind that we are going there. We then have to make up our mind to disrupt whatever has to be disrupted, to fix whatever has to be fixed, to shut down, close, or discard whatever needs to be abandoned, and to go forward and upward and make the adaptations, adjustments, transformations that future knowledge-based, technologically driven, competitive world demands. And I say demand, there is no avoiding it. Just like we can't duck from the foreign exchange crisis we have, we cannot duck from this world that is coming at us. And we can't pretend that we have time to get there. COVID has changed all of that. Everybody who is anybody is on a technological platform. Only the backward like us are not there as we should be. Now, this requires collaboration. It requires national effort to achieve a clearly defined goal of smart, knowledge-based, technologically proficient economy and society. Now, to do this, confrontation has to be left behind. But consensus on how to achieve our goal and the roles of the various sectors can only be built by plain talk, honesty, mutually respectful engagement that recognizes the value of differences of opinion, but the necessity of mutual compromise in achieving agreement, and the full recognition that agreement must be reached in order to get anything done with collective effort and energy for the society and for the Trinidad and Tobago nation. So all this fighting and squabbling and confrontation between various sectors in the society and between, let's say, the union and the government, because the government owns state enterprises and the unions like that because they can confront government. So we have to understand that we have to get past this because there's a behavioral requirement that is a necessity for economic progress. So, but we can't be building an infrastructure, the structure, the framework, institutional capacity, knowledge system, intellectual capital, and social capital, and know-how for a world of the future as if we did not know that there are thousands of homes in Trinidad and communities, hundreds of communities that don't get water for weeks. So we have to make potable water for every household a priority. So while we're building out the knowledge, technologically driven, internet connected society to business, government, society, and the world, we also have to take care of the water in people's homes. We cannot pretend also that we don't have a problem of producing enough food to feed and secure the nation, and that we do not have the foreign exchange required to continue to import at the level we import now. So meaningful import substitution and significant reduction of imported food has to be a priority. So we've got to put water in people's homes. We have to find a way of doing that. And I can't spend the time explaining that now. It has to be done. And the second thing is that we've got to focus on agriculture. Thirdly, we know that climate change will bring more rain and that it will bring more severe drought. We know that when more rain comes, we will have floods. We know that the water is a problem in the dry season for agricultural production and animal farming. We know that in the rainy season, flood destroys crops. We know that agricultural roads are a problem. Irrigation systems are largely non-existent, that land tenure for farmers stand in the way of production, investment, farmer security. We know that rainwater harvesting hardly exists, that solar power on farms are yet to happen. We know that land-based agriculture is very risky. We know that greenhouse technologies produced by the University of the West Indies and the University of Trinidad and Tobago can be successful. We know that disease-resistant crops and higher yielding crops can be made possible by sustainable systems already developed by UWI. We know that on limited space in controlled environments, we can grow almost anything in any quantity. We don't need land for that. All you have to do is to apply the right technology, the right nutrition system, the right temperatures, and a monitoring capacity through technology. And all of this is accessible on your smartphone, on your Samsung. So producing enough food in today's world for 450,000 homes, that is what we have. 1.4 million people is not a complicated problem. But once you set targets and production systems are set in motion, you have to organize, manage, coordinate, and design a system to market and on the plate, on the table, in the household that actually works. So it takes some human effort, some thinking, some strategizing, some collaboration, some structures, some systems, some connectivities. The solution of the flooding problem, the solution of the irrigation problem, the solution to the land tenure issues, the physical infrastructure issues are all connected. And a technologically diversified production system is also part of the solution. A serious approach to management of water, therefore, involves integrated planning, collaborative execution, closest to where the results are required, and can result in a number of green interventions at different levels and in different ways, and lead to best practice in both organic and other agriculture, and at least partially in each case, and sustainable agricultural systems. And this can be complete with early warning systems, evacuation plans, household, community protection initiatives, flood mitigation, serious dredging of watercourses and retention ponds in the floodplains. And potable water, we can't be talking about increasing the price of water without delivering pipe-borne water to the people's homes. Whatever the problems around this issue, there are solutions to these. And we must deliver water in 450,000 homes, 600 communities, 14 regional districts and Tobago, and 1.4 million people. I've said before, Trinidad and Tobago's population is half the size of the population of Brooklyn in New York. It is equivalent to a small village in Nigeria or India or China. It is shameful to continue to talk about this problem of water in the homes and about, and it becomes every year it becomes a source of community distress, and it becomes a political football every year. So smart economy, smart government and society, food, water, effective flood management for agricultural support, community well-being, and entertainment. Smart economy, smart government and society will have all the ministries working together around the issue of digitization, around the issue of water management and support for agriculture at different levels, because one is technology and knowledge-based, and the other one is knowledge-based too, but it is also very equipment and labor intensive as well. And these things could make a big difference. The Ministry of Planning is key in all of this, because they now need to set the policy so that you wouldn't have the problems that are contributing to this flooding and all of these things again. And the Ministry of Works could do the mitigation, the rehabilitation that is necessary. They could do retrofitting of various buildings and structures and communities. You could have volunteerism involved. You can create a lot of jobs. You can create a lot of community activity and projects in which you build community pride. I mean, I am fed up of the unimaginativeness of policy in this country. I mean, everything is just pick a project and throw some money. There is absolutely no imagination. Take the 5 islands and Chagaramas. These could be developed with private sector in investment. Government don't have to spend no money there. You could build the whole thing on solar energy and rainwater harvesting. And you could get private sector involved. And you could have a mix of local, regional, and international tourism built on sport, leisure, relaxation, and a range of cultural activities. And of course, you have the boating and so on surrounding it. But you would have to have a Coast Guard, and you'd have to have the Coast Guard vessels working. We have about 12 or 15 of them now. And you need a heightened collaboration on border security issues. All of this has to be technologically infused and very smart. There are many jobs to be created with such development, investment strategy. New development of this kind must take the COVID experience and planning for other unexpected disruptions in mind. You cannot do planning now without taking into account COVID and its lessons, including protocols of safety, and therefore managing and designing buildings and systems and walkways and parks. You have to take all of those things into consideration. You can't go on like COVID came here for a year or 2 years and it passed and gone. You have to prepare the world for the next COVID. On a little island, you have to prepare for that. Now, if you made that kind of intervention on the 5 islands and Chagaramas, then not only will it be sustainable and innovative and smart, but it would also be green. And this is very important. So I am saying basic things: food, water, flooding, and take part of the country and develop it and link it to tourism and entertainment, etc. And all our artists from here and all our artists from outside could be part of that development. You're talking about culture, you're talking about that kind of business and how we cannot develop it. Well, you have to create the conditions to develop it. You have to create the atmosphere, the ambience, etc. You have to take COVID into account, but you can do it. And I want to say something. There is no reason why Port of Spain, San Fernando, Chaguanas, Arima, Scarborough cannot be transformed into smart, sustainable cities. The 11th goal of the SDG it talks about the need to develop, and I quote, inclusive, safe, resilient, and sustainable cities. You know that COVID has been taking people out of cities everywhere in the world. You know that people have been leaving Port of Spain for the last 20 years and going outside. The population of Port of Spain now is significantly less than it was 10 or 15 or 20 years ago. So, you need to rethink the city. Recently, a study was done on sustainable cities, including cities of the Caribbean, such as Kingston and Port of Spain. Here is a quote from that document. The future of cities, I quote, "The difference between cities as problems and cities as opportunities is determined largely by planning and governance. Having experienced pandemic conditions, we need to rethink our approach to cities. Planning generally has to do with significant rethinking against the background of the COVID experience. How do we redesign to take these new realities into account? You would have to have food secure cities, not just food secure country. You wouldn't have to have Trinidad and Tobago as a food secure country. You'd have to have a food secure city. And the notions of convenience and access and connectivity within the system, both in terms of the location of one thing to another, as well as the connection on the internet. Now, I want to close on this point. We cannot do these things without recognizing merit, I want to say. All right, and there's a serious problem in this society which does not recognize merit. We cannot do these things without recognizing merit, without being committed to a fair and just society, without education, reform, and transformation, without being committed to equity, inclusivity, diversity, democracy, justice. If we are not committed to social justice in our society, the increasing inequality in the world will lead to explosion after explosion. And it's going to, let me tell you something, the next place is going to happen is in this hemisphere. And we might be one of the countries. And we're making joke with this thing. So I had a discussion with my friend Ray Holman, who is a great panelist on the double tenor. And he, by the way, he was a national scholarship winner in the days when he used to get 2 and 3 scholarships. And he taught in Fatima for many years. He's soon to get a doctorate from the University of the West Indies, the honorary doctorate. And this is what he said to me. I want to close with this. Trinidad and Tobago is on the brink of a precipice economically. He said we face the prospect of social disorder. He said there is too much divisiveness in the society. He said party politics is too antagonistic and disrespectful, and people are becoming alienated from it. And here is what he said. This is the most important point. To me, it's an original point. He said, talent is not drawn upon by the political parties, and the talented are afraid to go near politicians, and so they withdraw. He said, consequently, there is an internal brain drain taking place right here in Trinidad and Tobago, where those who can help don't volunteer, and those who can help are not called and are not taken seriously. So in Trinidad and Tobago, you can't have an external brain drain with everybody going to Canada or wherever they're going, and an internal brain drain in your society, and expect that society to get anywhere good. If that is what our political leaders are doing to our society, then for the sake of our society, we have to get rid of them. I'm sorry. If the culture of political parties is undemocratic and wrong, you can't get a democratic and right society out of political parties that are undemocratic and wrong, and out of a combative system that never gets you anywhere. So in summary, we need not just radical economic action, we need radical political action as well. And let me explain again what radical means. Radical means to restructure the economic and social order, and therefore in politics it will mean to restructure the political order and the leadership disposition, because you need a disposition that will make you into a smart, well-governed 21st century society with opportunity, with inclusiveness, and with an eye to equity, but you can only deliver that with prosperity. Now, I want to close with a quotation from Amartya Sen. This is something that he said when talking about making a comment on what was happening in India. He said the thing that we know from John Stuart Mill is that democracy is government by discussion. If you make discussion fearful, you are not going to get democracy, no matter how you count the votes. And that is very relevant to us. When someone says something critical of the government on the phone with me, and they then tell me, I'd better talk about it when I see you, because I'm not sure that somebody might be listening. That is not a way to run a democracy. And it is not a way of understanding what the majority wants either. And this is me talking now. Bad politics leads to bad governance. Bad governance leads to bad decisions. And such decisions that are bad become bad policy because they incorporated into the policy and strategy. And that then translates into bad self-justifying budgets. And you have to become bad leaders then in order to justify everything that you have done. And it does not matter who is in charge. It happens once you set that trajectory into motion. Now, I know that we were supposed to talk about the budget, but in my view, we have reached a watershed year in the world and a watershed time in Trinidad and Tobago. We postpone everything that we should be doing good in Trinidad and Tobago, government after government. I have to take responsibility for that because I wasn't too. Although I would say when we were in the NAR, we made significant structural contribution to the shift of this country that led to growth for nearly 20 years in the country. And we did some good things in the People's Partnership as well. But, you know, we have to live now with the consequences of the governance of the last 50, how much years? 59 years that we have in Trinidad and Tobago. And I feel this is an opportunity to make a radical shift in governance, in policy, in economy and economic action, and in the politics of the country. Because if we miss this boat now, I don't see how we are going to get back on a boat that takes us safely to any desirable shore. And therefore, I end my contribution with that conclusion. Thank you very much for listening to me.
All right. Thank you, Dr. Tuari, for that, I'd say, enlightening presentation. It really highlighted the difference between, of course, the envisioning of the society you want and the actions needed to reach there. And of course, inclusive decision making is one of the cornerstones of that. So we will transition very quickly into the question and answer segment here. So you're from the audience, you're free to, we're just taking a couple of questions because we're strapped for time, but you can unmute and ask your question to one or all of the panelists.
Yeah, David Thomas here. I know I had two questions for Dr. Hussain. If I still could find
Mr.
them.
Thomas, yes, go ahead and you can ask the question. Dr. Hussain is still here.
Yeah, but after this long thing, let me see if I can find them. I know he said that he felt that they should save all the oil revenues. Now, I don't understand how that could be possible because, first of all, if Trinidad is an oil producing country, just as Jamaica is a tourist or Barbados is a tourist economy, then to save all the oil revenues suggests that you're seeing Trinidad as a different type of economy. And I don't understand that concept. The second question I had, if I could really find it. Well, you could go ahead with that one. Let me look for the other one because it was so long ago.
Sure, Dr. Hussain. Mr. Thomas asked about.
Will we take a rounds of questions for everyone, given the time? I can easily answer that comment by David Thomas, but should we, and there are some questions in the chat group, should we just share them out to make sure that we address the concerns of the audience?
Yes, please.
So do you want me to share them out, or you or Bradley will do it?
I can do it
Okay.
as
Okay,
well. Mr.
other
Thomas, go
question-
ahead.
The other question I wanted to ask him was, he was saying that in the private sector, he was saying that he was linking growth in GDP and fall in GDP to a growth in number of persons in the private sector or the fall in number of persons in the private sector. I wanted to know if he was considering the private sector to include a lot of small and medium-sized enterprises, because what happens there is some of the salaries that are paid there will not attract a lot of people who go into government. Lots of time people think about the private sector as being more lucrative in salaries than the government. But a large part of the private sector, for some people, are not the multi conglomerates, but the smaller ones where salaries are even below what is paid in government. So I want to know, when he says private sector, what is he including? If he's including it's not small, everybody's small, the small person, all of them being part of the private sector, because that is a a contentious issue.
No problem.
Thank
So
you.
Rebecca, I can answer those two questions, but to be fair, let's
No
allocate the
problem.
rest of questions.
Definitely. And there is one question that applies to both Dr. Tiwari and Dr. Gonzalez's presentation, and it is as follows. So given that we would have heard from either of these two speakers in terms of what is the best way forward in terms of planning, in their opinion, what are we really expecting from a national budget for 2021 or 2022? What, based on their experience, how will or how can the government navigate towards some of those best practices that was highlighted? So Dr. Hussain, go ahead and answer those questions posted to you by Mr. Thomas. You can also do your closing remarks in the same commentary, and I would ask Dr. Tiwari and Dr. Gonzalez to do the same in theirs.
No problem. What I would also do is I will ask Kevin Ramnarine a question, seeing that nobody posed one to him.
Dr. Hussain, that is because Kevin had to leave a few minutes ago. He had an emergency, yes.
No problem. Let me answer the question. So David asked two questions. David, I would save all the petroleum revenues, but notice I didn't say I would put the petroleum revenues in the Heritage and Stabilization Fund, and I would use some proportion of the investment income to go into the budget on reproducible capital, following something along the lines of the Norwegian model. Now, it is very heartbreaking and disturbing to me, the relationship between total energy revenues collected and transfers and subsidies. I see it as chaos and mismanagement of the highest order. That's my personal view. I can't understand, and I have young children, and I would be unable to explain to them when the time comes and they ask me why I didn't say something. I would tell them I said something, but I was looked upon as an idiot, which is largely true. But I totally object to the mode of engagement of the energy revenues. Now, you would be correct in saying that, well, things hard now and we need to use some of the revenues. Yes. I am saying maybe in about a year, 2 years' time, we will have to reduce the use of energy revenues, increase the size of the non-energy revenues that we collect via the Trinidad and Tobago Revenue Authority and different means, and also reduce expenditure. So we have a fall in the non-energy fiscal balance. But I am not in support of using energy revenues, spending it out all as we collect. What would I say to my, I stand in front of a graduate CED class, and I'm glad most of them here. What do we say to young, bright students like that when they ask people like me, so Dr. Hussain, how come all you spend out all the energy revenues? What do we say to them, David? And the next question is, you had a comment about the private sector growth. I showed a graph with private sector employment and public sector employment and showed that output per worker in the private sector was significantly, I think it was as much as twice as high as in the government sector, and I use non-energy private sector. And so to avoid the biomal cost disease, or what we call asymptotic stagnancy, it makes no sense for the state to continue to absorb all the workers in the format shown in the graph if it is their output per worker is significantly lower than in the private sector. So I would have a closer look at that if I were a policymaker and try to adjust it. So Rebecca, that's
Thank you, Dr. Hussain.
in closing,
Yes.
I would say I really appreciated the conversation from the Dr. Tiwari, Professor Gonzalez, and Kevin Ramnarine. And it was very heartwarming to see young Bradley Osborne in the way he managed the session, and newly minted PhD Rebecca Gookool in the way she coordinated. So that's my closing comment, and thanks.
Thank you very much, Dr. Hussain. Dr. Gonzalez or Dr. Tiwari, would either of you like to tell us about what you're expecting from the budget come the 4th of October?
What am I expecting? Well, I really don't have any high expectations. I have lived through so many budgets that I've tended to become relatively
That's a little funny.
relatively blasé. But what I was suggesting is that we are running a very dangerous debt course. With this high level of borrowing, high level of external borrowing. And if you look at the current trends in borrowing, you would see where we need to try to look for alternatives. And I was trying to suggest some alternatives. I was trying to suggest that we could look at sale of assets, state enterprises, or government shares in certain assets. We could divest or we could privatize some of them. I also mentioned the question of how we could leverage government participation in, let's say, with the banks and with private investors, how we could increase the level of lending to small and medium-sized enterprises and share the risk with them in order that we could spread funding. We could spread funding to a larger group of people and who badly in need of that kind of funding because of COVID and other reasons and so on. So that my expectation is that if one is looking at the trend in debt fund in borrowing, one would begin now to take a step back and look at some of these alternatives. So that I would expect, for example, if in the upcoming budget, one would in a way look at these alternatives and say, okay, fine, I can raise so much money from the sale of state enterprises, state assets. I can get the private sector to participate in this number of infrastructure projects, which would save so much for the government. I could also raise, and this is what I expect the government is probably planning right now, is to look at the revenue collection and probably see how much they can earn from that. That is something that we all expect. Okay, you can raise some money from that. All of these sources in a way would lessen the burden of foreign borrowing. Foreign borrowing is a very dangerous thing, and we have seen around the region how that has crippled several governments, and we are heading that way. We're 85% of GDP in foreign borrowing. We're up in it almost to our throat. We can't put that on the next generation. So it's time to call a halt now and begin to look at alternatives. I noticed, for example, that we have some prices going up in gas and so forth, and there may be some production going up next year, as Kelvin said. But in my mind, there's still a serious deficit that I see coming here, and we have to really handle it in a better way. At the same time, trying to preserve the Heritage and Stabilization Fund. I think drawing down at the rate we have started to draw down doesn't leave much for further generations. So in a sense, we need to close that. I also went on to talk about the work we need to do in the area of building the tradable sector. Now, this is a huge area here, and we don't have really the time to go into it into any depth. But I would hope that certainly much more emphasis is put on that, because to me, any sensible recovery would mean that we're going that route. We're looking to build competitive production, both in terms of import substitutes as well as in terms of exports. So we need to widen the net. We need to drag more producers under that tent and try to make them see the value of participating in the tradable sector rather than participating in the non-tradable sector. All these kind of things that we've been doing here with malls and importing a whole lot of stuff and distribution cars and all of that, we must put a check on some of that now and begin to see that the real future of this economy is in terms of competitive production and exporting. So in that sense, I pointed to the need to look at some of the instruments in export production, which export promotion, which could be useful to us, like overhauling the export TTT, providing some new incentives, building the capacity for export, export grants, export co-financing. All of these are areas which these are not areas that we don't know about. We know about them. As a matter of fact, I was referring to some of them that are coming from the very ministry that is in charge of this, which they have been working on for years, and they have not been able to get done. So that I would hope that we revisit some of these things and begin to see the importance of them in that process of recovery. Thank you.
Thank you, Dr. Gonzalez. Dr. Tiwari, any expectations from the budget? Dr. Tiwari, you have to unmute your mic.
Yeah, I want to thank Kedu for inviting me this evening. I really enjoyed the presentation, and it, as usual, Rebecca, you and the chair, it was a first-class, what can I say, event, as it always is. And of course, the quality of the presentations was exceptionally high. What would I say in terms of expectations? I would say if the government would, they already have a Ministry of Digitization, if they would focus on not digitization, but focus on creating a smart economy and smart government and smart society, and they link that to an export strategy with a push to increase the amount of exports that the society produces over the next year, 2 years, or whatever, I think that would be good. Secondly, if they made a serious attempt to increase agricultural production and integrate that production system with a number of things, I don't have time to talk about them here. I think that would be very valuable in terms of jobs, in terms of imports, substitution, foreign exchange, savings, and in terms of agro-processing and exports. If they solve the potable water problem and they solve the flooding problem and supported agriculture with it, I think the opportunities that they will create by solving the flooding problem and creating community spirit and community harmony and giving people a feeling of goodness will make a big difference in terms of productivity and entrepreneurship and things like that. And I'll mention just two things that I did not mention before. I think that I think now is the right time to call in the IMF, not to take a loan from them, but to sit down with them and basically deal with a strategy for rescheduling all the debt we have and refinancing all of them, so that we have better terms and conditions and we have more space in terms of debt servicing. And we should also collectively call in the rating agencies. We have done very badly by them, no matter how we put this spin. And we should talk to them about what we talked about with the IMF and what we are going to do, and see how we can address our international rating as well, let's say over the next year or so. Those are the things I would like to see in the budget, but I don't know whether they will be there.
Great. Thank you very much, Dr. Tiwari. Panel, as per usual, this has been an excellent session. To the audience, I would like to say thank you very much for staying with us. To my co-host Bradley, thank you very much. You've done a really good job, and we look forward to re-engaging you going forward. Ladies and gentlemen, please have a safe evening. Don't forget to vaccinate and practice social distancing. So on that note, I would like to say have a pleasant evening, and I hope to see you back at our next sessions. Just keep an eye out for those emails and those blasts that will be coming. Bye, everyone. Good night.